Struggling to get your small business the funding it needs? Feeling like traditional banks just don't understand the unique challenges and opportunities that come with running an entrepreneurial venture? You're not alone. Many small business owners hit a wall when it comes to securing capital, whether it's for growth, inventory, equipment, or just managing day-to-day cash flow. But what if there was a way to navigate the complex world of business financing with ease, connecting you to a wide array of options tailored to your specific needs? Let's start with some of the most common and versatile financing options you'll encounter through Lendio. First up, business term loans. These are perhaps the most straightforward type of business financing, often resembling a traditional bank loan. With a business term loan, you receive a lump sum of money up front, which you then repay over a set period, typically with fixed daily, weekly, or monthly payments, plus interest. The terms for these loans can range from 6 months to 12 years, and loan amounts can go from $5,000 up to $4 million. They're excellent for specific, larger investments like expanding your operations, purchasing significant inventory, or funding a new marketing campaign. Next, we have business lines of credit. Imagine a business credit card, but with potentially much higher limits and often more favorable terms. A business line of credit gives you access to a revolving pool of funds up to a predetermined limit. You can draw on this line of credit as needed, and you only pay interest on the amount you've actually borrowed. As you repay the borrowed funds, your available credit replenishes, allowing you to use it again. This flexibility makes lines of credit perfect for managing cash flow fluctuations, bridging seasonal gaps, covering unexpected expenses, or taking advantage of sudden business opportunities. Through Lendio, you can find lines of credit ranging from $1,000 to $500,000, with repayment terms typically between 6 and 18 months. Minimum credit score requirements often start around 600, with monthly revenue expectations of $50,000 or more, and typically at least 6 months in business. Now, let's talk about SBA loans. The Small Business Administration, or SBA, doesn't directly lend money, but rather guarantees a portion of loans made by approved lenders. This government backing makes SBA loans some of the most attractive financing options available to small businesses. They typically come with lower interest rates, longer repayment terms, and smaller down payments compared to conventional loans, making them highly accessible. Lendio connects you to a wide array of SBA-approved lenders. Within the SBA loan umbrella, you'll find several popular programs. The SBA 7(a) loan is the most common and versatile, used for a broad range of business needs, including working capital, equipment purchases, real estate acquisition, or even refinancing existing debt. Loan amounts can go up to $5 million, with repayment terms as long as 25 years for real estate. Then there's the SBA 504 loan, specifically designed for acquiring fixed assets like commercial real estate or heavy machinery, offering long-term, fixed-rate financing with lower down payments. And for smaller funding needs, there are SBA microloans, offering up to $50,000 with a streamlined application process. While SBA loans are highly desirable, they generally have stricter eligibility requirements and a longer approval process than some other options. Typically, you'll need a credit score of 650 or higher, at least 2 years in business, and a demonstrated ability to repay the loan. However, Lendio's expertise in navigating the SBA application process can significantly speed things up, potentially getting you pre-approval within 24 hours and funded within 30 to 90 days. Closely related to MCAs is invoice factoring, also known as accounts receivable financing. If your business deals with unpaid invoices and experiences cash flow gaps while waiting for clients to pay, invoice factoring could be a game changer. With invoice factoring, you sell your outstanding invoices to a factoring company at a slight discount. The factoring company then provides you an immediate cash advance, typically a large percentage of the invoice value, often up to 85 to 90%. They then collect the full payment from your clients. Once the client pays, you receive the remaining balance minus the factoring company's fee. This frees up your working capital instantly, allowing you to pay suppliers, make payroll, or invest in growth without waiting 30, 60, or even 90 days for customer payments. Invoice factoring can provide funding up to $50 million, with terms tied to the invoice payment cycle, usually 30 to 180 days or more. Another critical financing option, especially for businesses with physical operations, is equipment financing. Whether you need new construction machinery, restaurant appliances, medical equipment, or office technology, equipment financing allows you to acquire the assets you need without draining your working capital. This type of financing uses equipment itself as collateral, making it a self-collateralized loan. You receive funds to purchase the equipment and repay the loan over a set term, typically 1 to 10 years, with interest. Once a loan is fully repaid, you own the equipment outright. Loan amounts can range from $5,000 to $5 million. Equipment financing can be easier to qualify for than other loans because of the collateral involved. Minimum credit scores can start as low as 520, with monthly revenue requirements often around $50,000 or more for businesses just starting out or those with very limited operating history. Startup business loans can be a lifeline. While many traditional lenders shy away from startups due to their lack of established financial history, Lendio's network includes lenders willing to take on this perceived higher risk. These loans can come in various forms, including term loans, lines of credit, or even business credit cards specifically designed for new ventures. Loan amounts can vary widely, from a few $1,000s up to $750,000, with terms extending up to 25 years. Eligibility for startup loans often focuses on the business owner's personal credit score and the strength of their business plan. Some options through Lendio might require as little as 3 months in business and a personal credit score of 680 or higher, with monthly revenue of at least $6,000. And finally, if your business is looking to purchase or refinance its physical location, commercial mortgages, also known as commercial real estate loans, are the solution. These loans are specifically designed for acquiring properties like office buildings, retail spaces, warehouses, or factories. Similar to residential mortgages, they are secured by the property itself. Loan amounts typically range from $250,000 to $5 million, with longer repayment terms of 10 to 25 years. While commercial mortgages generally require a significant down payment, typically 10 to 25%, and a strong financial history, Lendio can connect you with lenders offering competitive rates. Common requirements include a credit score of 650 plus, at least 2 years in business, and a solid business plan demonstrating repayment ability. With that said, thanks for watching, and until next time.